To say a few remarks and to introduce our opening panel, please join me in welcoming to the Atlanta stage Truist Head of HR and Legal Technology, Mina Hall.
Thank you, Mike. Welcome, everyone, and thank you for being with us today. I'm Mina Hall, and I lead HR and Legal Technology at Truist. At Truist, we understand innovation happens when we work and learn together, which is why we're a proud sponsor of Fintech South 2023. The focus around this year's conference is reliability, opportunity, and transparency. 3 top priorities for remaining relevant in today's market. Today and tomorrow at Fintech South, expect dynamic discussions about the biggest trends in fintech, as well as connecting and reconnecting with others in the fintech community. I'm so excited for the next 2 days and what it has in store for us. And so let's get started with our first panel, the digital transformation of climate. Climate change is altering our planet and will directly affect the way we do business. This dynamic discussion will be hosted by Truist's very own Julie Bennett Bunuan, Head of Sustainability Investment Banking, alongside senior sustainability leaders from IBM and Intercontinental Exchange. Please join me in welcoming our panelists to the stage.
I'm Julie Bennett Bunuan, and I lead Sustainability Investment Banking at Truist, as well as our Family Office Advisory initiatives. Sustainability is fundamentally a big data problem and also ties into a number of the themes that are here at the core of Fintech South 2023. And climate and sustainability data are inherently multifaceted and the applications, uses, demands are expansive, including measurement, transparency, reporting, risk management, opportunity identification, as well as the development of new markets and solutions. I'm delighted to be joined today by 2 leaders in this space whose firms are spearheading innovation to create value and develop solutions. Elizabeth King, President, Sustainable Finance and Chief Regulatory Officer of Intercontinental Exchange, as well as Christina Shim, Vice President, Global Head of Product Management and Strategy for IBM Sustainability Software. Thank you both. Thanks. Today we're going to unpack the challenges and opportunities in the digital transformation of climate. And just to frame the discussion and to give some context for where IBM and I sit in this conversation, if I could just ask each of you to introduce yourselves and the role of your firms in this discussion, that'd be great. Elizabeth.
Thank you, Julie. It's great to be here today. So I'm going to introduce myself. ICE, or Intercontinental Exchange, is an Atlanta-based company. And just to give you a quick background in terms of the range of our business so you can understand the perspectives that we have in the discussion today around climate and sustainability data. And the way I always start in explaining what ICE is I start with that we own the New York Stock Exchange, which everyone has heard of, and somewhat surprised that it's owned by an Atlanta-based company. So ICE has 2,400 listed companies, all of whom are at various stages of their own sustainability, developing their own sustainability strategies. We provide tools, and we partner, which we can talk about some more, with IBM on providing some tools around measuring and reporting of emissions and other sustainability information by public companies. So we do look at it from the perspective of the public company's needs. ICE also has a very large financial data business and has for decades. We have, in the past few years, started to move, as our clients have demanded, into the space to provide climate risk data, as well as other sustainability data to help insurance companies, banks, and asset managers as they are measuring and reporting on to their owners their own sustainability footprints. And then finally, we operate environmental markets. And what I mean by environmental markets is we are the trading market. We're the largest and most liquid market for trading carbon credits. Largely those are right now related to the cap and trade programs in the EU and the UK and the North American regional cap and trade programs. All of these places we get input from our clients, and we provide them with tools to manage the risk.
Hi, everyone. Great to be here. Thanks. So I'm Christina. I'm from IBM. I run our sustainability software business. I think you all probably know IBM, so I won't explain that. But just in terms of how we think about and what we're focused on in terms of software and technology and AI and sustainability, really at the core of it, we've touched on it already, data is the biggest problem. And all of the customers that we work with, it's really challenging for them to really understand across all of their operations, pulling that into one place and understanding exactly what their sustainability or emissions footprint looks like. And so at the core for us, without the right data or without being able to understand what the data is telling you, it's not actionable and it's not operational. And that's really the core of the challenge for all organizations, right? Because no matter how big or small you are, core to your business operations is how you make it more efficient, how you optimize, how do you make sure that you are reducing waste and emissions and optimizing your cost and production. And so regardless of whether or not you're a larger company that has to deal with reporting requirements that are coming out all around the world, or smaller companies that are just trying to do really good business operations, it's really core to understanding how you optimize around that. And so we really take that into consideration across all of our products on the software side within my portfolio, ranging from, how do you make sure that you're thinking about predictive maintenance in your factories, to how do you make sure your supply chain is transparent and traceable? How do you make sure that you have all of that data kind of building and bridging up so that you have a one-stop shop to understand exactly what all of that means for your business, and then pushing actions based on analytics back down into that business. And so that's where it's really powerful, because any organization can have net zero commitments, carbon emissions footprints that they're trying to measure, all of these things and strategies that C-suite executives are putting out for the public manifestation. But until the rest of the business actually knows how to action that within the core of operations, it won't really go anywhere. And so that's really at the core of what we work with our customers on, is the operationalization of that and the actioning of it within the data business. So to Elizabeth's point as well, one of our products in Visi, we partnered with them to make sure that all of the publicly listed companies at the New York Stock Exchange have access to a platform, again, whether or not they're larger or smaller, so that they can have that one-stop shop and single source of truth. And that is something that's really powerful if you think about kind of the holistic viewpoint of how you manage a business, regardless of where you sit within the organization. So I'll stop there, but that's kind of the basis of how we are looking at this problem.
Well, maybe to build on that, to bring it really practical to these complex challenges, maybe build on what you were saying, Christina, and then to Elizabeth. What are some examples of the kinds of challenges, questions that customers are bringing to you to add more solutions from your perspective? firms?
Yeah, absolutely. So I'll give a few examples. So one is a large infrastructure company that we work with in Asia Pacific. They essentially run all of the civil infrastructure in Australia and New Zealand. They have 35,000 suppliers that they work with, and you can imagine, and I think they joked that as they were thinking about their emissions, not just within the core of their business, but also through their supply chain, because that's kind of where the world is going now, you have to be able to measure that. They said, we were trying to do this all in Excel, and it was the world's largest pivot table. And they said, this is impossible. And we said, of course, you have 35,000 suppliers. How are you supposed to understand what they're all doing and how that feeds back into the posture of you and your organization? So that's one example where they were like, we need to make sure that we have a platform that can pull all of that in and make sense of that for us so that we know where to focus our attention. Because otherwise, I mean, everybody knows Excel is wonderful for what it does, but you try to manage that type of calculation and action and all of that, it's really not the right tool for that. Technology is an enabler, it's not the solution, but we're never gonna get to where we need to get to from a climate change or a risk or a sustainability perspective if we're not leveraging technology, right? There's only so much that we can do manually. So that's one example. Another quick one is we worked with a utility company, and they were using one of our products, Maximo, to do predictive maintenance. And so they did not have to go manually out and send people to work across 4,000 grates in the city. They were able to really understand how to predictive maintenance around all of that, so that they just had to send people as is. And that saves on labor, that saves around employee health and safety, that saves around, you know, operational costs, all of these things. And so that was also really huge because it was very, again, tactical. I joke it's kind of the non-sexy stuff, right? But again, if you're not operationalizing it really in core operations within the business, we're not going to get to where we need to. So just two examples there.
So what I would do, I want to step back a little bit. So from the perspective of New York Stock Exchange and the public companies that we obviously have a huge range of large mega cap companies, but also new companies, new public companies who are really facing the demands of a public shareholders and a much higher profile. So we've provided some tools for them to look at how they approach their sustainability strategy, and looking at it within a framework of measuring, targeting, managing, and then reporting. And providing them some tools along the way and examples from peers within their sectors as to how to do that. So clearly measurement is a key part and often a challenge for many public companies. How do you measure the impact in emissions, and especially through your supply chain? And depending on the complexity of your supply chain, that is going to be more or less demanding. And smaller companies in particular are finding this particularly challenging with the resources that they have. Then the next demand is going to be, how do you target? You're going to want to reduce your emissions. Most companies have goals about reducing their emissions over a certain time frame. So you need to set a target, and you need to understand what that target is and incorporate it into your operations. You don't want to a CEO doesn't want to say that they have a target and then have no reasonable way and understanding of how they are going to meet that. And managing that target and the measurement is key. And I think that what Christina just laid out is really the management part of this. How do you incorporate this into your day-to-day business? It's not just a once-a-year reporting exercise. This is much more akin to a financial report, where yes, you report 4 times a year as a public company, but that is an everyday activity in how you make sure that you are collecting and maintaining the data so that you are prepared to report when you need to report. And the climate reporting is increasingly becoming a similar exercise. And that's a challenge because we've had financial accounting around for, 100 years or more. This is a very new area, and understanding how you can do that and how you can incorporate it through your entire company and making it part of the day-to-day business of each of your business units is something that larger companies are doing, but smaller companies are really trying to get their feet under them at this point. And what we've found is that at the exchange, we have a real opportunity to provide networking opportunities and a platform for people to discuss how they have solved problems within their sector and pass that along to companies who are currently wrestling with that. And then, of course, reporting. Most reporting today is voluntary. It will, and certainly in the EU, will not be voluntary very soon. But how do you decide what the boundary is that you're going to be reporting? Are you reporting on the U.S. entities? Are you reporting globally? It's not always obvious what you're reporting, who you're reporting to, and what the timeline is for reporting. So these are challenges that companies are struggling with. There's different vendors that can help, and then peer groups and organizations that can help you solve these problems. I speak about it. It's very clear that the climate risks, and I think we're becoming much more comfortable talking about those risks and thinking about how they may impact our businesses. But what I just described in terms of the framework can be applied to any sustainability goal. And it can also be applied not just to public companies, but our clients who are investment managers who have obligations to their asset owners are going through the same process. Their asset owners want their investment managers to measure the GHG footprint of their assets. They want them to be managed, and they want them to be reported out. So the framework that I laid out that we're very explicit in talking to our public companies about can be applied not only to climate but other sustainability goals, and to investment managers and other companies that are measuring the same types of things for their businesses.
And I think building on there's the reporting, and then it's the users of that data, which are both those that need to report it and those who are going to analyze or make investment decisions or lending decisions against it. I know certainly as you think about the other side of the business in terms of data and data sets, that Intercontinental Exchange has really be intrigued of new areas you've been looking at or what you've been adding to that. And also IBM, how AI is being leveraged with geospatial data to also round out this conversation of how do you actually get real data and not just have to be estimating.
Sure, I'll start. I mean, as I mentioned just now, there's a growing demand from the broader investment community to better understand a company's global physical footprint, for example, its offices, its employees, it's where its manufacturing facilities and the like are located, and then of course its supply chain, and how these things contribute to its overall risk exposure. So we've developed a number of tools, data tools, that are ingest millions of latitude and longitude location data points for companies and their subsidiaries we have a geospatial platform. And then you combine these lat and long locational data with global climate hazards, things like heat stress, drought, sea level rise, wildfires, and things like that, that there's a large public data sets out there. So we are able to incorporate those in, and these help investors to understand the financial impairments and the value at risk for companies in metrics, and they aid in decision making and risk analysis. So another example is, as we've talked about, companies are developing targets and net zero pathways. And we have tools that allow you to monitor your progress, as well as investors to monitor your progress in meeting these targets. There's a lot of reported data out there, and we've been working to develop ways to verify the validity, really the accuracy and integrity of the reported data, so that those who are using it can have more confidence that the data that they're looking at is accurate, or understand how, what its accuracy may be within some range. And but importantly, I think another way is that companies and asset managers are looking is to assess how the companies they've invested in are making progress on meeting their goals.
So I think everybody is well aware and is living, all of the extreme weather conditions that happened this summer. I think it was the hottest summer ever in recorded history. So to add on to the points, we announced in May that we were working with NASA and adding geospatial foundation models to our environmental intelligence suite. IBM owns the weather company, so we own all of the weather data that comes with the weather company. And so our environmental intelligence suite, in conjunction with what we're doing with our AI foundation models and what we're doing with NASA, really is, we're focused in investing in areas to support exactly the type of use cases that Elizabeth just laid out. For example, in the news, you probably all heard that I think it was Allstate pulled out completely in terms of providing insurance in the states of California, and I think in Florida as well. These are real policy decisions and business decisions that companies and organizations are making that affect all of us, right? The businesses that we work for and as consumers and citizens in the country. And so for us, it's really important that we do as much as possible in investing in this area to support our customers to make better decisions, business decisions, right? How do we make sure that we understand what areas perhaps to do insurance underwriting versus others? Or how do we make sure that we're pricing in appropriately what it means in terms of physical risk as it relates to climate risk? We're seeing basically a new extreme weather event happening, on the weekly, if not sometimes on the daily, unfortunately. And so as this becomes, more increasingly an issue, we want to make sure that we're investing and leveraging the technology that we have to support organizations around that. So that's just an example of one area that we're focused on at the moment. We're putting a lot towards it. Increasingly, I'm sure tons of conversation happening in the next 2 days around generative AI and what that means. I want to also put out there that generative AI is not just large language models, right? It's not just the LLMs. It's also around geospatial and images and things like that. There's a lot of other ways that we can use generative AI to make sure that we're supporting, from a technology perspective, issues around climate change and climate risk.
And you mentioned some of the insurance decisions and other decisions that are driven by that climate physical risk. Given we're sitting here at Fintech South, kind of just recentering some very tangible examples in the financial markets and financial technology space, as we think about data sourcing, one example of that is the integration within payment processes and payment systems and software to extract the information that's needed for this carbon footprint or other systems for the supply chain. And certainly digitalization is a key enabler for sustainable finance and environmental markets. And maybe if you could just touch on that a little bit more, Elizabeth.
Sure. So if you go back 10 or 15 years, financial market participants were relying heavily on the disclosures by companies to really understand climate risk. And this was, in most cases, almost exclusively an equity view of the world. How is this going to impact the equity value of a company? What the geospatial data and the analytics and AI do is it accelerates the ability to use alternative data. And what I mean by alternative data is just broadly anything that's not a company disclosure. And alternative data has really been very critical in helping to uncover more useful information, to understand climate risk across fixed income assets, including things like municipal securities, mortgage-backed securities, as well as the fixed income securities of companies. And that's been a real change. Just to illustrate, one of the examples that I can come up with is we at ICE have very deep coverage of the U.S. assets, coverage of assets within the U.S. that are tied to physical space, to real estate. We're expanding this globally by the end of the year. And our platform models the financial impacts to multiple layers of any geographic area's total economy. And it principally includes risk to property value, risk to economic output, which if you can think of an asset, a security, a fixed income security that's tied to a revenue bond, for example, by a particular city, that's tied to the revenue that they're able to bring in. And that is impacted by how many people want to live there and what is the economic output that can continue to be generated by that area. So the being able to understand how climate and the risks associated with climate can actually impact the ability of a bondholder, a bond issuer to pay back its obligation is an important tool to investors. The core kind of spatial intelligence insight into the impact of climate on the physical environment is you can assess it through a number of different catastrophe modeling. So these are models, the sophisticated models that insurance companies have been using for years to understand what their risks are, and increasingly, climate hazards, assessing what the standard hazards, whether it's hurricane, wind damage, precipitation, storm surge, and so forth. How is that going to impact the value of securities that are issued? and the issuer is impacted by these different climate hazards.
I'll just add one thing to complement. I think especially when we think about financial service institutions like banks, the biggest area that we're working with our customers on is around something called financed emissions, right? And so to complement what Elizabeth shared, that's essentially like the equivalent of supply chain for banks, right? It's not, banks don't have the same kind of supply chain that a retail or consumer products company would have, but it's all the companies that they're lending to or choosing to lend to. So their entire portfolio of companies that they're lending to, understanding all the risk and how to price that in, choosing whether or not, if I decide to lend to you versus to you, perhaps you have a stronger sustainability posture, so I'm going to give you a lower interest rate, right? Or I will decide not to give it to you at all, right? Not to lend to you at all. These type of decisions are going to increasingly become important. And as these regulations come out in the EU and I think somewhat soon in the SEC, though it keeps getting pushed, these type of discussions and business decisions are going to be increasingly part of the day-to-day. And so banks, as they think about their lending habits and their policies and procedures, they will also have to start thinking about all of these aspects as part of how they price in or make decisions as to who to lend to. And that could, trickle down. This is now just kind of a little bit speculative, but it could trickle down to what that means for us as consumers as well. When you think about, getting a mortgage or whatever on some residential properties, as you're getting lending from certain banks, they are thinking about what that means in terms of the property and the physical risk of what they're trying to make sure they're managing as part of their business. So finance emissions is really big for financial services organizations, especially in the commercial and residential banking sector. And I think adding on to what Elizabeth said, it's kind of like the entire sector writ large, from big to small. Everything that we're thinking about from a sustainability and climate perspective is going to start getting priced in.
Before I ask you to do a little crystal ball gazing, as I see our clock ticking down, don't want to skip over what you've both mentioned, the important partnership that you have announced together, and to share the genesis and the aim and ambition of that.
Yeah. I mean, New York Stock Exchange has a long history of working with best-in-class companies. And importantly, we partner with companies who provide tools to our companies to meet the needs of a public company. More traditionally, every public company needs an IR website. Every company needs to do press releases and have the ability to talk to shareholders. And we have partnerships that help our public companies fulfill those needs. This is a new area. Standardized, audible, GHG, and ESG reporting more broadly is something that all public companies are being expected to do. And so we were happy to partner with NZO with their platform to help our companies meet those needs.
Yeah, we were really excited about this partnership. It was to make sure that, yes, they're all public companies, but they all range in size quite a bit, and it's across all sectors, right? It's across geography. So we wanted to make sure that we were also providing support to the extent possible. I mentioned earlier technology as an enabler to make sure that all of the publicly listed companies on the New York Stock Exchange had access more readily, regardless of size, sector, or geography, to supporting their data management and reporting requirements. So we were really excited about that.
So for the crystal ball gazing and to maybe spur some conversations in the next couple of days, in thinking ahead, next 5 years, what's a challenge that you're really excited about the opportunity of climate data and analytics solving or addressing?
I mean, I think it's some of what I've already touched on, is that investors want to understand how the integration of climate data will impact the various stages of the investment cycle. How is it included in the pricing, the valuation of assets, and the impact to default risk for fixed income assets? These are all topics that fixed income investors are interested in understanding better, and being able to have the data and then being able to use analytics and AI to really consume it and understand it and apply it to their needs is something that we think is happening now and is just going to accelerate over the next 5 years or whatever time frame.
Yeah, so I'll just piggyback right exactly off the last part, which is I'm working right at the intersection of AI and sustainability, and it is super powerful. And so all of the investment that tech companies are putting into generative AI, I think a lot of it is hype right now. That's kind of all you hear about. But I do think that if you take a robust stance on how this technology can be used to help accelerate sustainability goals, it's super powerful. And in the next 5 years, I think it will make a tremendous difference in actually helping companies and organizations to accelerate and achieve the goals that they've put in place, because we're not getting there fast enough, and this will help us to get there faster.
Well, thank you both, and hopefully this has spurred some conversation for the next couple of days on these challenges.
Thank you so much.